Hi, and welcome again to another session of market analysis for today, June 4th of 2024. I am Giovanni Betancourt, analyst, trader, and educator with Vantage Markets, and this is a recording previous to the open of the session in the United States. Now, new month, obviously, and there have been two big surprises in the first half of 2024. In January, everyone was confident the Federal Reserve will be cutting interest rates this year. And now that's by no means a certainty. And stocks are still continuing to march higher even after the outlook on rate cut speculation shifted. The promise of lower borrowing costs had made it more likely that companies could expand cheaply and enable consumers to keep spending. That raises the question of whether stocks need Fed cuts to sustain the rally in the second half. And the answer is probably yes. To be sure, mega technology companies such as Nvidia, which gave the market a big leg up on Monday with announcement of a new chip, don't need the Fed. Some for other titans such as Microsoft or Apple. They don't rely much on the corporate bond market to raise money and are therefore less sensitive to higher interest rates. They're also sitting on mountains of cash. All they really need to keep rising is continued excitement about how artificial intelligence will bolster their profits. But for the rest, it's different. The S&P 500 equal weight index, which takes the average moves of all the stocks without accounting for their market capitalization, is up just 4.2% this year. Less than half the 11% gain of the standard S&P 500 index. Small companies may well need to borrow money cheaply to boost revenue, and they'll need strong demand as well. Now, there are signs that demand could be cooling. A report yesterday showed manufacturing was weaker than expected in May. The Atlanta's Fed growth tracker was also disappointing. There's still a good chance that growth cools just enough to allow for Fed cuts this year while demand stays reasonably robust. The odds for a September cut edge above 50% yesterday, according to the CME Watch Fit tool. But if demand weakens too much and the Fed doesn't cut, prospects for stocks look shaky. Now, on that note, the S&P 500, will it reach 5,500 by the end of this month? That is something I'm going to throw out there. I know it is, I'm putting myself on the line here, but it's something to consider. So for all you enthusiasts of technical analysis and obviously doing your research and analysis, chart reading, keep that in mind. Well, with that being said, let's take a look at the NASDAQ. We are in balance within yesterday's trading range, inside yesterday's candle. So what would we entitle? Now, obviously, I'm looking at this chart, right? And we have made quite an advancement and above 19,000 for the NASDAQ. It had retreated and it made that low last week on Friday, but it quickly recovered. But from here, that recovery brought it back into the a previous move that took us to that high. So, given what I just said, would it be right for us to say that perhaps another leg up is to be expected? That's something that I am considering. So that's for the NASDAQ. Now, so let's take a look at the S&P and let's take a look at why would I say that by the end of the month we will be at 5,500, which is right up here. So taking a look at this chart, we see that we have created basically a great ceiling. This is shown strictly, this is very simple to see. So once we are able to fluctuate above that and close above that, then we can probably say yes, that will most likely happen. But our first hurdle will be to close above this particular level. And that particular level could probably just well be, could it be this same high made on the May 23rd? And that high is 5,367. So if you think about that, 5,367 points to 5,500, roughly speaking, is about 140 points, right? So 140 points, to move 140 points in a month is not far-fetched, okay? So, but obviously, what will be the catalyst to push the S&P 500 up to 5,500 by the end of the month? Well, obviously, earnings season is almost just basically done. We are entering in the summer season in the United States, so a lot of participants will more likely be out of the market. But then again, obviously, the momentum or the thrive behind this market rally most likely will continue. Let's just see as we move along the timeline, what will we be seeing that will help us reach that 5,500 by June, by the end of the month. For now, I'm looking at the chart, and obviously what we see here is that even though yesterday was pretty much flattish, we are trending lower today. But we are, however, just bouncing off this 21-day moving average, okay, which acts as dynamic support. So let's see if today we'll be able to at least close above yesterday's high. That will be just one little takeoff out of the list of things that we need to see for this to continue moving. So once we reach our resistance point, then we could start getting more and more aggressive with our trades. But initially, let's just wait for today to see where we close, if we're able to recover from this sell-off right now and at least close above yesterday's high. As far as the Dow goes, the Dow is a bit different animal all by itself. It has been moving lower, trending lower. It did bounce off this support. Yesterday, it did close in the red. Today, we are also trending lower. We did open with a tiny gap up, but we are trending lower. Let's see also if today the index will recover itself. But I'm looking for the Dow to actually just do this right here for today. Crude oil is the one that has just really taken us off guard, and it has continued to trend lower. $72 is now the psychological support level for it. I'm gonna bring down my resistance as well. So $76 will be the resistance. Now this obviously could also be just profit taking. Yes, obviously after what the OPEC said, they are trying to take out a lot of supply from the market, and the demand obviously has been out there. And this could just be another attempt, for other market participants to say, you know what, you want to take it out. We need a lower crude oil. Again, this could also entitle for those positions or those traders that like to buy the dip. This is a nice big dip to buy, and it could probably also recover and fluctuate towards our resistance. For now, I am going to stay out of it until we are flattish around $74, if that's the case. Now, Nat Gas has opened with a small gap up. It is poised to continue moving, trending higher. So 273 is the target, buying Nat Gas. Gold. Well, India apparently has repatriated 100 tons of gold out of the Bank of England into their banking, RBI, and there's more to come. Obviously, this move is, for whatever government reasons they do it, but a lot of investors have also flocked into gold. So I suspect, and this is just basically equal highs, equal lows. It's a great setup for a breakout, and I'm going to leave my resistance, my support where they are. So let's see. I am still in favor of buying gold, even though we are trending lower. Silver is the one that has kind of given me a little bit of headache. It is trending low below the 21-day moving average. Will it continue to trend lower and find support at 29, or will this just be it, where it recovers and just fluctuate to the upside? Let's see what will happen by noon and see if we're at least above the 21-day moving average. Then we have copper. Copper seems to be I'm going to bring down the level of resistance for copper. And 450, I'm going to leave it there. I think copper will rebound from 450. If it does, I'm going to be taking a position long at 450. All right, so Bitcoin. Will Bitcoin be 100,000 by the end of the year? 150,000, 250,000? Who knows? Really, obviously with interest rates, if there's no cuts, it'll be placing a lot of pressure on the coin. But also, the ETFs is gaining a lot of ground. A lot of governments are also, not just El Salvador, but other governments are also implementing some of the technology into that. So the halving has already been done. So I am bullish with Bitcoin. 70,000, however, is my initial target, which most likely will probably be met because Bitcoin doesn't move by thousands. So, but I am long buying Bitcoin. The currencies have the euro of today has fluctuated above the 109, but it quickly retreated. So I am going to make that my resistance again, bringing up my support to right about yesterday's lows. And let's see if it'll recuperate when it touches the 9-day moving average that I have here. Let's see for the pound. Also the pound, I'm gonna bring that puppy up a bit just to 128,300, and then my support to 127. And that could probably happen if the dollar index decides to take another dive like it did so yesterday. We fluctuated below our support. So I'm going to bring down my support to 103,700-ish and my resistance to 104,400, which is where the 9-day moving average is. So it is bouncing off the lower Bollinger Band. So let's see what will happen. That's it for me today. Have a great trading day, and I will see you tomorrow.